Hello there, this is James and you're watching OneRoyal and it's live. And not just OneRoyal and it's live, but OneRoyal, as you can see, on the road. I'm in a different place today. And unfortunately, because I'm in a different place, I can't obviously control the elements. But the market news still needs to go on. Today, I want to talk about a subject and actually generally ask you the question to see if indeed history may repeat itself, and also ask the question, are we seeing one of the greatest recoveries of all time? Plus, Trump is really doubling down on his displeasure with the current Fed chair, and some big information or big data coming out tomorrow. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand for entering any trade. With that out of the way, let's get started. So, first of all, I really want to ask this question to all of you and see what you think, because at the moment, the stock market is partying like it's 1999. I mean, we are looking at a major comeback for all the tech stocks after months of uncertainty. I mean, let's just have a look what the markets had to deal with. Okay, we've had to deal with the birth of Chinese AI like DeepSeek, tariff and trade war, Israel-Iran conflict, and a Fed that is really, doing the wait and see policy. Wait and see policy for now. We'll talk a bit more about that. But it really is a party at the moment, because Nvidia, for example, has hit a new all-time high. The Nasdaq has hit or closed at an all-time high, and the S&P 500 is just teasing an all-time high. With all this uncertainty which we've had, it's a complete U-turn of what we witnessed several months ago. Now, this leads me to a question. Because, if you look at all the different central banks, their projections have also got back, or getting close back to what they initially thought before this tariff and trade war took hold of the market. So there is general optimism happening in the market. There's general belief that the worst is over and now it's the good times. Leads me to this question. Are we going to see a repeat of 1999? What do I mean by that? Well, in 1999, it was the height of the dot-com bubble. And we all know what happened there. Okay, the S&P at the time was trading 24 times forward year earning estimates, so 24 times ahead of year earnings estimates, so ahead of the game. Currently, the S&P 500 is trading at 23 times this year's numbers. So again, as a question for all of you, can it happen again? Are we about to see an AI bubble? Is that about to grip the market? Is that what we're about to see? Now, it's an honest question. It's an open question, because there's a lot of similarities to the excitement of the dot-com bubble and the excitement of AI happening right now. Is it overvalued? If the S&P is trading 23 times ahead of the estimates, what we haven't got yet, does that mean we're about to see another bubble? It's a question for you guys. Let me know what you think. Let me know what you think about this, because I can personally see that certain stocks are potentially overvalued. And plus, we are not over this trade war yet. Yes, we have a ceasefire between Israel and Iran currently, which is great. But that's a very, fragile ceasefire. That could kick off any moment. As well as that, this trade war is still there. The 9th of July is just down the road. And we all know what happens on the 9th of July. That's when reciprocal tariffs, or the delay to reciprocal tariffs, finishes. So what's going to happen to the market then? So yeah, for now, the market, as I always say, there's much rejoicing. So, and we'll look at the market in a moment. So like I say, let it have its time in the sun, but I'm saying the market needs to be cautious. Moving on, there's another reason why the market is rejoicing as well. It's not just because the ceasefire, or they're forgetting about the 9th of July. It's not just because of that. There's something else as well. Trump is looking for Powell's replacement. Now, don't forget, we all know how much Trump hates Powell. He's calling him a moron, Mr. Too Late, etc. The number of insults is baffling. He's attacked him very verbally, very open, quite a lot. But don't forget, Powell's term doesn't end till May 2026. It's just under a year. But Trump has hinted that he may find his successor as soon as September, October of this year. Now, this is really unheard of, because usually you don't appoint a successor till maybe 3-4 months before the existing term is finished. So it's obvious that Trump's frustration with Powell's wait-and-see policy has led him to look for this. So, and here's the thing. Because of this, the market also is viewing it like there's a good opportunity now that the Fed indeed will cut interest rates. It's going to happen soon. Because this announcement, or if a new successor is announced, this is going to undermine Powell's influence for the remainder of his term, because it's all going to be about the next person coming in. So that will then really possibly force his hand into cutting rates before he wants to. And don't forget, there's already other Fed members. You're a Republican, I mentioned this in yesterday's video, who wants to cut rates as soon as the next meeting next month. So again, the market is rejoicing because they are now looking at it thinking a rate cut is potentially on its way sooner than later. But here's the thing as well. Maybe Powell's got a point, though. Because don't forget, Powell and a lot of the Fed are saying, no, we want to wait and see because we haven't seen the true impact yet of Trump's tariffs. So let's look at it first. And we saw a bit of data last week which started to hint at that maybe we're beginning to see the tariff effect. And something else has come out today, which maybe again is showing us the tariff effect. Because yes, indeed, we had US GDP today announced negative 0.5% versus negative 0.2% previous and expected. So there's a big decline because there is a sign that businesses are being held back. Why? Because of Trump's tariffs. So maybe Powell and the Fed have a choice. I mean, not a choice, sorry, have a point. Anyway, what's going on with the market? Like I say, there's much rejoicing at the moment. And we'll go and look at the market. But there's something else I want to talk on before we go to the charts. Is the greenback is really suffering because of the risk-on appetite. The euro and sterling in particular are trading at levels against the dollar not seen since 2021. So let's have a quick look now at the markets and see how it's looking. So first of all, we're going to start off with, let's look at the S&P 500. Okay, as you can see, it's literally teasing that all-time high. Currently up today, 0.56%, but 6,126 points. We're so close. Don't forget, the all-time high was around 6,142 points. So we are in touching distance. Same with the NASDAQ. Okay, don't forget the NASDAQ, like I said earlier on, closed at a new all-time high. Again, it's breaking a new all-time high obviously being pushed by obviously Nvidia and the tech stocks because of this tech boom, which is driving it. Trading around 22,360 points, up 0.55% today. Let's look at the Dow Jones as well. Dow up 299 points, 0.70% up today. So again, market is really rejoicing. If we look at, let's look at the Mag 7. Tesla, which had a good start to the week with the robo-taxi soft launch, up currently 16%. Meta up 1.62%. Microsoft up 0.66%. Amazon up 0.72%. Alphabet up 0.35%. And Nvidia, who is the poster child of the Mag 7 at the moment, up 1.33%. Again, touching a new all-time high today. And finally, Apple. Again, Apple's got its own problems and down negative 0.77%. I will do a special on Apple because I think it's of general interest to me a lot. We look onto currencies. Like I said, the euro is having the best time against the dollar since 2021. Same with the cable, British pound having the best time since October, in fact, 2021. And the dollar index, 97 points. And finally, with all this interesting thing I want to raise, and again, it's an open question to you. Gold, with all this risk on appetite, gold potentially should be struggling more. But currently it's still trading around $3,316 an ounce, which sort of says to me, yeah, though we're looking for a negative week and indeed a negative month for June for my beloved yellow metal, the run is not finished quite yet, potentially on this. So keeping a close eye on it. Anyway, we've got more data to come, and there's something big happening tomorrow, which is worth keeping an eye on. And that, of course, is the USD PCE. Now, this tends to be the Fed's favorite gauge to measure inflation. It's their favorite one. So this is happening tomorrow. So don't forget to keep an eye out for that. And again, this might fuel the odds, indeed, of the Fed cutting rates in the immediate future. So be prepared for that. Don't forget, you can ask me questions anytime at all. And it's a bit different today because we're on the road, we're out and about. And we've got fantastic background music, which is lovely, but I can't control that, but never mind. Yes, so don't forget you got that. And as well as that, if you're sort of watching me on YouTube and you like this sort of stuff, subscribe if you like. Hit the notification button so you know next time I'm going live, which is pretty much every day. As you can see, I even go live when I'm out and about. And if you like this type of thing, by all means, give me one of these. As well as that, if you're not part of the OneRoyal family and you want to know more about us, there's a little link in the description below. Click it if you like and find out a bit more about us. And if you like, join the OneRoyal family. As well as that, I have noticed a lot of people go back, watch the recordings, which is great. I love any type of support. And if you are watching the recording, if you have a question or you have an opinion, put it in the comment section below. I will see it and I will reply to it next time I go live on air, which will be most likely tomorrow. Because like I say, I do go live pretty much every single day. Okie dokie, if there is no questions, no problem. Leaves me to say then, don't forget, these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, with the risks at hand before entering any trade. Till next time, every single one of you, trade safe.